Joining us this morning, the In the Loop cast this morning, is Jim Reynolds. He's the chairman, co-founder, and CEO, and our good friend of Loop Capital Markets, all the way from Chicago. Jim, great to see you again.
That is always good to be here.
Now, Scarlett, I think, is pointing to a bigger issue here of the overall markets, right? Because we had the GDP numbers come in a bit worse than expected, 1.8%. So you question whether or not the markets, the equity markets, have gotten ahead of where the economy is. What do you think?
Well, I think the equity markets have it certainly partially right. We're certainly seeing a significant amount of profitability amongst the companies that are reporting. I think about over 75% have beat the street estimate. So they got that part right. I think the top line growth, that's a concern. It's been a concern, and we'll see kind of going forward if it remains a concern. But the markets are reacting to what we're seeing right now. And
corporate profits.
In corporate profits.
Well, speaking of profitability, and Scarlett was talking about technology, you had software and equipment spending up something like 11.5% in the first quarter. A lot of companies put off some spending in the fourth quarter because they got some tax benefits. But the point is, you buy that stuff in the first quarter, you're not more productive right away. There's an argument that you put that equipment into place, you get more productive over the year, and that helps companies, even if the sales aren't stronger, get better bottom lines, and that's one of the bullish arguments for the stock market right now.
Well, I think one of the other very bullish arguments is the growth and the ascendancy of other emerging markets and the demands that we're seeing there. And obviously, the dollar has been very troubling to many. But
are you troubled by it?
Well, you certainly don't want it to be here for a prolonged period of time. But when I look at what Bernanke did yesterday, not to segue over, but he basically set some priorities that I think were probably right, and that is jobs, growth of business and economic growth locally, and then we'll see if that moves the dollar, if in fact domestic growth will move the dollar forward. So if we see this dollar pain that we're seeing right now continue, I think we may have a problem with it, but right now I think we can tolerate it.
Well, let's talk about a little bit about the dollar, commodities, everything, because it's all interrelated right now. One of the bearish cases for the market right now is the rise in commodities. So many companies already making commentary right now about their costs going up in value. How much does that have an impact? It's got to have some kind of an impact on margins at some point, if not already.
You're going to see it. I mean, I think you're going to see the fact that getting productivity gains are going to be tougher when your inputs are priced the way these commodity prices are going right now. Basically, we're at highs for all of them, driven by various factors. So productivity gains are going to get tougher and tougher and tougher. We're going to have to find ways to increase the top line. Certainly, that's going to be a lot of international spending, but we've got to see if we can also generate a little bit more domestic demand. So those factors certainly are going to go hand in hand.
Well, I'm going to get less technical. You know what they say about May, right?
Sell in May, go away.
Some people are talking about that now after the big rally we've seen.
But it's only, well, I guess it's close to May.
It's almost May.
It is almost May right now.
I don't think we see a huge amount of headwinds. I think that Bernanke gave a pretty good all clear, that he expects to see great stock performance. So I'm there.
Well, so one of the things, between Michael, Jim, one of the things that we've talked about, Jim and I were talking about the ticker on the bottom that is scrolled across there. PepsiCo is saying that they're going to offset rising costs by raising prices themselves. Is that a theme that we think is going to develop out? That's the question here. Will we see those margins get affected? Jim, something we've been talking a lot about.
Well, it's a theme that has to play out, and I think that the consumer is going to be tested as to how much, in fact, they can stand, what they can bear, in addition to rising gas prices. But the fact is, we've got to see an uptick in revenue from companies, so they have to pass it
But if they're all raising prices, and that means their margins are going to stay protected, though, no?
They are, but what about the consumer? 70% of our economy, right?
Right. Ideally, they'd like to be able to raise prices and maintain those margins. They're going to be squeezed.
But even today in the GDP numbers, I mean, you saw consumption was still pretty healthy. So it seems like consumers can absorb price increases.
Well, a lot of the gas prices will probably come in later. We'll see what happens as we move forward. We're definitely seeing consumers cut back every day. We're hearing about it. And so it's really going to be an issue. And we'll see just how much. With PepsiCo, I think it's a pretty gutsy move in terms of how much and what the elasticity of that move is going to be. But they have to test it because we have to have the top line revenue growth.
Right. Okay. Jim, I have to mention you're here in New York because what? You're expanding your trading floor, right?
Yeah. Today is we're opening an open house of our expanded trading operation in downtown New York.
Okay.
Hopefully
I will be there. I will be there.
Looking forward to seeing you, Betty.
Get the drinks ready.
Don't worry. The bar will be open.
Now, you've just come back from China.
Yes.
What was in it for Loop to go to China?
Well, it's pretty interesting because we launched 2 years ago, we started trading a global equity trading desk. We expanded to a 24-hour operation. So after New York Stock Exchange closes, we move into Asia, then we move into Europe. So we've been trading on the Chinese exchanges for almost 2 years.
Okay.
I had never been there. And so I went with Mayor Daley to look and see.
Mayor Richard Daley.
Mayor
right.
Richard Daley, who is viewed as a head of state there. Chicago is viewed as the single most friendly Chinese city to China in the U.S. As you recall, it's the only city that Hu Jintao came to was in the U.S. in addition to D.C.
That's right, yeah.
So we met with several of the large asset managers there to talk about trading opportunities, to talk about investing opportunities. We did 5 cities: Beijing, Tianjin, Hangzhou, Chongqing, and Hong Kong, where you were born.
Right.
And really got to know the entrepreneurs and the entrepreneurial spirit there. It was a really amazing trip.
Let me play for you. You know, Gary Locke, who's now going to be, the Commerce Secretary, now going to be the ambassador to China. Let me just play for you what he's saying about how American companies should operate in China.
I'm very interested to hear that.
The Chinese have proposed an indigenous innovation policy that basically says that the government of China will only buy products that have been engineered, developed, created, and patented within China, even though American companies may offer superior products and technology, goods and services. We're constantly fighting to make sure that American companies have equal access.
And this applies to a lot of the manufacturers and technology companies, but did this issue ever come up?
No. Not that one. This really wasn't that sort of trip. This was a trip where in Chicago, it's a city where several Chinese companies, and we have welcomed Chinese investment in Chicago, have come in and invested, and we visited U.S. companies from Chicago that had invested in China.
Okay.
And so this really wasn't based on any of that.
What were the biggest concerns that the Chinese raised to you and the mayor?
Barriers to entry. They were concerned about
their barriers to entry here?
Yeah, barriers to entry here. Perceptions that Chinese investment meant Chinese takeover. A fear that it was going to do something other than create jobs, spur the economy. They actually raised the issues of making it easier for Chinese nationals to travel back and forth to the U.S. So the focus that they had was really on how they could do more business.
Did they know you know the president?
Oh, we didn't bring that topic up.
Well, the reason why I ask is because did they ask you anything about the fiscal situation in the U.S.?
They're concerned about it. I mean, obviously, they don't have the political system that we have here with the Republicans and Democrats at odds. They're concerned about what happens in D.C., how we address certain issues as it pertains to the deficit, how we address the trade balance with China, how we address the currency issues. So they're very concerned about and very sophisticated on the U.S. political system.
Well, how do you think the White House is handling it right now, this budget debate?
I think my own view is moving into an election year, it's going to be tough. Because I think the factors.
But tough for who?
I think it's going to be tough to come to a conclusion, a satisfactory conclusion on both parties. Because clearly right now the Democrats have what the Republicans want, which is the presidency. It's likely that they may make some more headway in the Senate. But I think the politics may, in fact, complicate the discussion on what might be best in terms of a solution going forward. That's my view.
Jim, great to see you.
As always, Betty, good to be here.
As always, fun to have you here. That was Jim Reynolds of Loop Capital Markets, the chairman, co-founder, and CEO. And coming up,